Good morning and welcome to Stock Market Today. It's Wednesday, September 18th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show and get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities closed mostly higher in Tuesday's trading in front of today's FOMC decision on rates. Bond proxies led the way higher, while energy was the worst performing sector on the day. Treasuries were stronger across the curve. The dollar was weaker against the euro and sterling, but little changed against the yen. Gold ended up 10 basis points, and WTI crude, big reversal, down 5.7%. Just off the worst levels of the day after the Saudi oil minister said production would be fully back online by the end of the month. Your outperforming groups, REITs, utilities, materials, and discretionary. Your underperformers, energy, industrials, fins, and healthcare. As we get to the desk this morning, U.S. equities are down 20 basis points after finishing higher yesterday. European markets are slightly higher following a mixed session in Asia. Treasuries are stronger across the curve. Dollar is stronger against the major crosses. Gold is down 20 basis points. WTI crude down another 70 basis points, extending yesterday's decline after that positive update on oil restoration in that attacked oil field. So stocks advance in front of the Fed meeting today. For the most part, equity markets moved higher yesterday. We're holding above that key support area between 2,900 and 2,950. Now, resistance remains in play. We're kind of around that level between 3,000 and 3030 on the S&P 500. The RSI continues to move higher in price, which is a positive indicator. As well, Chaikin money flow is bullish. Now, obviously, we're going to see, or there's the potential for some volatility this afternoon when we get the Fed's interest rate decision. Now, the market had been pricing in pretty sure odds of a 25 basis point cut just a week ago, but those odds have declined. Now, I still think the base case is for a cut, but a week ago, the odds of a 25 basis point cut were over 85%. Today, they're about 55%. So just something to keep in mind as we've gotten some positive economic data over the course of the past week. The market is now seeing less of a chance of a rate cut. So something to keep in mind. There could be some volatility around the Fed's press conference later this afternoon. Let's turn to our market in a minute. What are we talking about today in our note to clients? Well, stocks move higher ahead of that meeting. We hit on that. The major markets in the U.S. are overbought near resistance. And when I say they're overbought, I'm talking about our overbought, oversold indicator, proprietary to Chaikin Analytics. It's a little bit more sensitive, designed to become overbought and oversold within the context of an existing trend, and markets here in the U.S., whether we're looking at the SPYs, the Qs, IWM, they are all overbought based on that metric. Oil retreats on news of Saudi oil production reviving quickly. Sentiment continues to become less fearful in the marketplace, and futures, as we said, do point to a lower open here today. Let's take a look at the power bars now for the major indices. Dow added 15 basis points yesterday, but it didn't do much for its power bar. Still skewed in favor of the bears. 4 bearish or very bearish stocks for only 3 bullish or very bullish stocks. S&P 500 tax on 27 basis points, 124 bulls to 73 bears. NASDAQ was an outperformer. 24 bullish or very bullish stocks, 19 bears there. Small caps underperformed, down 0.25%. 663 to 282 bulls to bears. Rally in bond sends yields lower, and that helped the bond proxies. Real estate up 1.4% yesterday. 4 bulls to 1 bear. And I think it's interesting that after some shifts in the market last week, and now remember, in my notes, I've been writing that these changes are early days. It remains to be seen if they're going to stick. So far this week, they appear to be reversing just a bit. Bonds have caught a bid. The bond proxies have caught a bid in the equity market. Oil has retreated a little bit over yesterday, right? So we're starting to see maybe a little bit of a change taking place after some strong moves last week, no doubt about it. Still a work in progress. Never remain dogmatic in your view. Follow the weight of the evidence. Stock of the day today, Evercore Inc. Ticker symbol EVR comes to us from the Investment Brokers and Managers Industry Group. Closed at 84.73 yesterday, up 1.16%. Power gauge rating is very bullish due to very attractive financial metrics, very strong earnings performance, and positive expert activity. We'll note, though, that the stock does have some weak technicals, but when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. So we have a very bullish stock, strong trend, strong industry group, type of name we want to consider. But now let's look to see if the setup is there, and we will quickly see that it is not. The very bullish rating, again, the ribbon here tells us where the rating has been over the past year. But stock continues to be an underperformer relative to the SPY. Remember, we want bullish and very bullish stocks that are outperforming the market. At the same time, the stock is overbought based on our indicator. Now, it has regained the rising trend line, but I think it's still too early here. I think you're starting to see a shift in this group, and we're going to take a look at that in just a little bit. I want to add Evercore to a bullish watch list and see if the situation changes, especially if the industry starts to strengthen a bit further. But right now, I think it's too early. The tactical setup is not there for Evercore on the long side. Let's look at our sector tracker. The movement of the major sectors over the last 5 days. Energy still at the top of the list, even after giving some back yesterday. Materials, REITs, and financials round out the top 4, and it's an interesting dynamic at play there. If rates are, in fact, now heading back lower, we would expect real estate and utilities to do well, and we would expect the financials to come under pressure. This is the group that I am watching closely. Industrials, tech, and healthcare are middle of the road. At the bottom of the list, comms, discretionary, and staples. A lot of moving parts to this market, and that's what happens, right? We've had some long-term trends entrenched, and if those trends are changing, I mean, that's a messy process. These long-term trends don't just stop on a dime and go the other way. There's a lot of back and forth, so we just want to stay nimble and keep an eye for signs that trends are changing or continuing. Our industry in focus, cap market services, over the past 6 months has outperformed the S&P 500 by a little over 1%. Power bar ratio is very strong, 27 bulls to 7 bears, gets it a rank of number 8 of 21 subsectors that we track here at Chaikin Analytics. And some of the indicative names there, here's Evercore, TD Ameritrade, AMTD, also with a very bullish rating, and INTL has a very bullish rating as well. And to me, this group kind of starts to look interesting. Again, we looked at Evercore, but let's take a look at what's happening with the group in general. Here's KCE, the SPDR S&P Cap Markets ETF. We can see that the fund itself does have a bullish Chaikin Power Gauge ETF rating, and the trend is strong as the fund trades above the rising long-term trend line. And what's interesting to me, and why I say I think we want to start to pay attention to this group, is because we're starting to see a potential personality change or a shift in the relative strength. Stocks, the fund's been an underperformer since June, and even when it's tried to outperform at various times this year, it hasn't been able to get much traction to the upside. That's largely a function of the interest rate environment, but we are now trying to outperform once again. So we have a bullish stock that's trying to outperform, a bullish fund rather, that is trying to outperform the market. So we're watching. We're not there yet. Similar to what we looked at in Evercore. Can't quite get there yet. Money flow, trying to turn bullish. Fund is overbought. So I think it's something to keep an eye on. I think it's an interesting area. I think that if rates do continue to rally, we're going to want to pay more attention to this group. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers. MSCI added 4.4% on the day, although I did not see any real news to drive that stock higher. Same goes for SEE, up 4.12%. Nothing company specific. BLL up 3.8%. Nothing company specific there to drive trading. Ulta seeing a little bit of a rebound. The stock's been under massive pressure after their big earnings miss and guide down about 2 weeks ago, seeing a little bit of a rebound. And it's interesting to note that they bucked the trend amongst a lot of the retailers yesterday. CME was initiated with an outperform rating on Monday night, which sent the stock higher yesterday, 3.73% to the good. Loser side of the board, department stores were under pressure yesterday. JW Nordstrom down nearly 10%. APA caught a neutral initiation. And on top of that, obviously, oil was weak. I think the remainder of the loser side of the board has one theme in common, and that was the pullback in oil. Marathon, MRO, down 7.75%. Helmerich and Payne down a little over 7%. Halliburton gets a double whammy. Oil trades lower, and they caught a downgrade. That was enough to send that stock lower by nearly 6.5%. Let's talk about it now. Remember we talked about the big news last week was a rotation out of the big growth and momentum stocks and into value areas of the market like energy, areas of the market like financials. But what's interesting to me is that for all the news and for all the headlines of this is finally the shift to value, momentum hasn't broken down, folks. MTUM, the iShares MSCI, Momentum Factor ETF. Now it's pulled back from the highs after meeting resistance at around, I call it the 123.5, 124 level, but it's held above the key support. And the short-term trend continues to be higher. We have a series of higher lows for MTUM. At the same time, momentum based on the RSI is middle of the range. Now, we haven't seen it break topside or downside yet. It remains in the middle of the range. So that kind of confirms this consolidation that we're seeing in the fund, but hasn't broken down, and that's important. And on a relative basis, it's found a key support level. Right, we're looking at relative performance of MTUM against the SPY going back a year, and it's kind of found this support area where it's beginning to move higher. So I think it's a little bit premature to call for the death of momentum here. Obviously, we want to keep an eye. Obviously, it's testing key levels on both an absolute and relative basis, but it hasn't broken down yet. Right? Be careful with the headlines out there, folks. Do the work. Sentiment is less fearful these days. Now, what we're looking at here is the 13-period moving average of the CBOE put-call ratio. And what you'll notice is that spikes above 1.1 tend to coincide with near-term lows in the market, right? And that happened in August, and we were writing about it in our note. Every Wednesday, we talk about sentiment. We were highlighting the fact that that spike recently over 1.1 likely marked a local low. Subsequent to that, the S&P 500 broke out of the August trading range and is now testing the July highs. Sentiment now has become less fearful than it was, but it's not at the point just yet where I would argue for taking a contrarian view to the bearish side, right? When sentiment gets overly fearful, we want to take a contrarian bullish view. And when sentiment gets overly frothy, we want to take a contrarian bearish view. We're kind of middle of the road here. And that goes for the VIX. That goes for the CNN Fear Greed Index. Nothing quite yet at levels that would warrant taking a hard line in the other direction. Obviously, it's something we'll keep an eye on. We do it every week. I watch it every day. But just wanted to call it out here today. Oil fades on that Saudi news. And this is kind of interesting to me, because oil had the potential. That spike higher on Monday broke oil out of this consolidation and pushed it towards the top of a more important resistance level. But we've quickly faded and actually dropped back into this consolidation zone. And I kind of find that interesting that, oil wasn't able to build, right? Obviously the news, oil field in Saudi Arabia is attacked, potentially taking 5% of the world's oil offline. The fact that the Saudis are able to come out and quickly get that supply back online caused the big reversal here. So purely from a technical standpoint, we have to start thinking about this as a false breakout. And the odds favor a pullback into this zone, and that's what we're seeing. It remains to be seen if we're going to go back down here and test the $50, $51 level, but oil squandered a chance here to break higher. And here's XLE, likely going to fade from this downtrend line. And what I will note is that within our model, a lot of the oil stocks, a lot of the energy levered names are still bearish, right? The group is still bearish. So the one-day spike looked interesting, could have been a turn, but it might not be the case. And finally, let's look at a stock idea. We were talking about aerospace and defense earlier this week in the show. Let's look at Leidos. Very bullish stock, strong trend, strong industry group. Market and model are in agreement here as the very bullish rating is met with outperformance. Stock is oversold, above a rising long-term trend line. Leidos looks interesting as a long idea. That's it for today, folks. Head over to chaikinanalytics.com/today to sign up for that email. You can follow along with this show. Get daily stock ideas for you to consider. Hit your inbox every trading day before the market opens. I hope you have a great day, everyone.